My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave Dubow. And have you ever wondered how to thrive in the shifting tides of the real estate, even amidst economic uncertainty and turmoil that comes along with interest rates and the economic market that we are living in today and in the past and likely in the future? Well, today, my guest, Rick Hamrick, a seasoned investor specializing in pre-foreclosures, that one always gets me, and leveraging private capital. He's here to give us some secrets, some tips behind the scenes here. Rick, welcome to the show. Great to have you here.
Hey, thanks, Bryce. Thanks for having me.
Yeah, no problem. There's a lot, we're going to get into the foreclosures, the pre-foreclosures. We're going to get into that. But I think what a lot of people always want to ask, and, we'll cut the teeth on it, is like, why did you join? Why did you get into real estate? A lot of people can avoid it their entire lives, but what sucked you in? What got you in the game?
Yeah, you know what? I mean, as cliche as it sounds, I do think it was initially being exposed to Rich Dad, Poor Dad, right? And in 2016, as a W-2 employee, having just built a house that I was living in, I said to myself, you know what? It's time to start looking at doing something for myself and offsetting some of these W-2 income taxes, right? So what better way to do it than get into real estate? So I bought my first rental property in 2016 and experienced everything that everybody would experience on their first rental property, with bad contractors getting fired to it is amazing that when you don't do it right, you learn very quickly. And I said to myself, I'm like, this is not what I signed up for. Right. I was not supposed to spend nights and weekends away from the family and do all that kind of good stuff, to where, over those couple of years, continuing to work the W-2 job and seeing a bunch of, deals come across my desk as a buy and hold investor, I said, these aren't really deals, right? The market and the economy is going crazy, and the wholesalers and the deal finders and those folks are actually, trying to take as much meat off the bone as they can and not really leaving anything for me. So I said in 2020, why don't I start to explore that for myself? And I stood up my own marketing and acquisition company at that time. So that's kind of how I got into it in the beginning, was purchasing some buy and hold properties, to then flipping the light switch on and going, I'm already in sales and I already talk to people anyway. Why don't I just start talking to the homeowners and the borrowers direct?
Yeah. And I mean, there's kind of two trains of thought on that, is that some people are too busy and they're paying a fee. But you're right. A lot of times what appears to be a deal, after the wholesalers and the deal finders get their piece, that, I always feel like you become an true investor when you're generating your own leads. And until then, it's probably more of like a passive hobby where someone throws you a deal once in a while and maybe you go there every weekend and you fix it up yourself. Like, that's like the hobby level investor. But when you have that thought, you're like, wait, you mean I can get this thing for 20K less if I just send out the marketing, stand up my business, and have a conversation and close the business? And some people are afraid to be on the phone too. Don't forget that, coming from a sales background, it was probably nothing for you to go, hey, what's the deal with this house, and have that conversation, handle the objections, and get something, some agreement. So definitely, people become a seasoned investor, a real true investor, in my opinion, when they actually start to acquire their own deals. So once you started acquiring your own deals, what did you see that do for your business?
Well, I just saw it provide the light, essentially, that I didn't need the W-2 anymore. And for me, the W-2 world was a great culture for the longest time. I worked for a fantastic software company. We're doing a lot of innovative stuff, building it up, selling the company, acquiring 15 other software companies, doing mergers and acquisitions and all that kind of good stuff. But you get to a certain point where you start to scratch your head and go, why am I doing what I'm doing for everybody else when I can
Yeah.
do it for myself? So standing up the marketing and acquisition entity in Kansas City in 2020 allowed me to see that it was something that I could do that could be very sustainable, right? And then I had a false start and went back to another W-2 job because I thought it was as cool as could be, right? Because I even told the CEO, the CFO, and the chief commercial officer at the time, they literally said, well, what are you looking for, Rick? And I said, listen, I don't ever want to become the CEO of this company or any other company for that matter. That's not my ultimate goal. My ultimate goal is to work in a company where I enjoy the culture. Because if you don't enjoy the time that you're spending and with the people and what you're doing, then it's not worth your time. You're trading that time for dollars and it just doesn't balance out. So about 7 months after going back to the W-2 world, I just looked at my wife and I said, I'm done. I can do this real estate world full time. And that's what I did. And in 2020, I was introduced to the world of, pre-foreclosure forced sale. In my background, my technical background in demonstrating software solutions to customers and prospects, it was all about selling the value. It's much harder to go in to a customer and say, hey, I'm showing you this feature because it's a cool feature. It's a lot easier if you come in with a solution. Hey, I'm showing you this feature because you told me this, and I'm showing this to you because you told me that. I'm solving a problem for you, which then in turn made the sale really easy. And that's what I learned with the pre-foreclosure forced sale, like really sticky situations, was if you can actually provide a solution, you're in a much better place than most of the other folks. So instead of being one of 5 people competing on a deal, like, hey, I just filled out 5 Facebook forums, I'm just going to go with the best one, right? And in any auction or any situation like that, the winner is the biggest loser because they ended up paying the most, right? So
Yeah.
where you actually can go in and provide value as somebody is what really kind of drew me into that world, because for me, it's about life by design. It's about lifestyle and not jumping whenever the seller says jump high. And it's
Yeah.
also about not having to deal with the situation where you feel really bad about negotiating with the little old, 80-year-old lady, right, who's spent 40 years in this house, hasn't touched the house since the 70s or 80s. You still got the shag carpet and the panel walling and all that kind of good stuff. And you're literally negotiating in $250 increments because rightfully so, they're protecting their equity. They're protecting what they've built over the last 40 years, but it just doesn't make sense from a deal
Yeah. And you
perspective.
move
So I
on,
was
you
turned
move on
off
to the next. Yeah.
by that. I was turned off by that and realized that you can follow the rules, the regulations, and guidelines of banks, institutions, lien holders, the IRS. You follow that and you can negotiate with them to the tunes of hundreds of thousands of dollars sometimes at times,
Yeah.
especially
I've
when you
heard
move into
some,
the commercial.
yeah, I've heard some, especially in the United States, not so much here in Canada, but with the foreclosure business, I've heard that banks can write off some debts too, where they'll like take a cut and they'll just be like, yeah, we'll take a bit of a loss. It's all kind of fake money anyway. That's the way I feel when the banks talk. It's all, we manufactured that note
Yes.
anyway. It wasn't real anyhow. So we can take a cut on it if you're willing to buy our problem. And so I really like what you said there too. And I'm a huge, and I'm always saying that it's not we buy houses, it's we buy problems. And when you really start solving problems is when your business is going to blow up, because a lot of
Yeah.
people are buying houses out there, and that's going to get you like 1 in 10 deals. But you start solving problems, your ratios are going to get down to like the 1 in 5. And that's
Right.
when you really start scaling at your business. So what do you like most about the whole pre-foreclosure business?
Right. And I do think what we've talked about for the last couple of minutes is it solving problems. And when I'm solving that problem and negotiating with the banks and institutions, as you just alluded to, I'm just a KPI. There is no emotion involved in it like it is with your standard borrower or seller in that particular case. So being that KPI, it's a lot easier to me to take their rules and regulations. I mean, for instance, it is if it's an FHA backed loan or a VA backed loan, I know exactly what they will take based on
Mm-hmm.
the as is appraisal that you get. And we're buying those properties. Banks and institutions are not in the business of owning properties. They're in the business of lending money. They make their money off of that. In fact, they make the worst homeowners because they're literally going through a yellow pages, just picking the nearest handyman, and they're paying, three
Yeah.
times, four times, five times the rate that you or I would as a landlord in your particular market, because that's not their business. That's not what they do
They don't want to
every
take
single
houses
day.
back. They just
They
want,
don't want to
they
take the
want
houses
the
back.
note.
That's
Yeah.
it. And they love working with people who know what they're doing on the other side. So I'm not a licensed agent. I am not a HUD negotiating counselor or any of that type of stuff. But the moment they get a hold of somebody who understands how to provide a pre-foreclosure solution, be in the PFS process, pre-foreclosure sale or pre-foreclosure solution process is much better than the foreclosure department. And they would much rather take care of it before that
Yeah,
property
because
is
then they don't have to go to
REO.
auction and all that other
Right.
stuff and fees and hiring someone to deal with it. That's
Yes.
one of the surefire ways. We hunt foreclosures up here. It's very similar. We don't have the access in the lists. We got to go to the newspaper and get in the car, and we got to hunt them down. We can't get their phone number. We got to go knock on doors
Right.
and leave messages. But you're right. The bank loves, nothing makes the lawyer happier than when it doesn't go to auction and he doesn't have
Right.
to go down there and you just, oh, do you see the offers in your inbox? Yeah, it's a done deal. That'll cover you. Okay, we're
Right.
done. And so
Right.
you made another really good point about pre-foreclosures and foreclosures in general is when you understand and it is just numbers. I know exactly, like when I find out there's a property and it's a foreclosure, I know the discount schedule. I know exactly when I need to call them when I see the adjustment because I know the numbers. I know how they do they have a very processed liquidation. So if you
Yeah.
can time it, you can be the guy who wins it because, oh, you called the day that it was right in range and you're the first guy to make an offer and you win the bid because they can't sell it for anything less unless it's at that number. So there is a systematized way definitely to hunt pre-foreclosure and foreclosures that a lot of people just don't. What do you think it is? They just don't want to be bothered with it, or do you feel like people think it's too complicated to participate in? I know when I started the conversation, it was a little sticky. Like what are they really facing? I haven't been foreclosed on in that sense. So I'm not a customer of the bank's foreclosure proceeding. I had to go and learn all
Right.
that. So what do you
Yes.
think holds people back the most from hunting these things?
Fear. Right. I mean, it's been easy. It's been very easy picking since 2012 up until, 2022 to just throw darts at profits and just watch, the real estate. You could be a terrible investor. You can buy a property completely wrong. You can get in a situation where you're delayed on selling the property. And by being delayed 3 months, you actually make an extra $20,000.
Yeah, the
Right. There
market
was
goes
no
up.
skill in what was happening over the last, 10 years or so. So I think what it really comes down to is a fear, and it's a legitimate fear, right? If I'm an investor and I'm doing pre-foreclosure properties and I'm running PPC ads where I'm using keywords to have those conversations, the first minute that there is low equity or no equity or something's upside down or there's a $90,000 IRS lien on title or other things, they trash the lead, right? This is where we always say, don't trash your leads, send it to us because the tougher the situation, the more rewarding it will be. And so when people start getting into those situations, they know that if they get really deeply entrenched in something, the alternative for the borrower is foreclosure if I screw up. So most people want somebody to hold their hand through that process and they don't know where to find it. Who out there is actually getting through a lot of these sticky situations, which is what led me to, one of my other LLCs with my business partner who's been doing nothing but pre-foreclosures for 24 years. We train and we educate a community and we will actually JV with that community. So we're not just up there saying, hey, go watch 60 hours of my content and talk to my people. We are hands on, and we'll do an equity split so we have equitable interest in the deal. So therefore we can negotiate with, the banks and the institutions on a particular deal. And we're not brokering that deal. We are a participant or a party to the transaction itself.
Yeah, so
So I think it's
you're not worried
fair.
about getting your hands dirty with a lot of mentorships and coaching. It's like arm's length,
Right.
and for good reason. It's like if all the gun companies had to like warranty and police all the guns that they sold. Like that's a bad business. And the same thing, it's
Yes.
like someone can give you a bunch of real estate training and then you go out and like shoot yourself in the foot. It's like,
Right.
we didn't tell you to do that, but I signed up for your thing. And it's like
Right.
they don't want to be involved in that depth. So good for you guys for taking that on. Now,
Right.
when it comes to real estate investing, what do you think your secret sauce is? What comes easy to you that other people might find difficult to do?
And I hate to say it again, but we've talked a lot about it, is being creative in coming up with those solutions, right? And talking to a borrower today, right? She is in need. She needs to move. Her husband just passed away a few months ago. She's got a young child. And that's one of the other directions that I always go. People are always like, the pre-foreclosure market seems so dirty. It seems like so sharky, like you're taking advantage of. And it's not really, right? I mean, the people that truly need the solution, the people that truly need the help, in this case, in this day and age, are generally the elderly or a broken, dysfunctional home where, the stay-at-home or the single mom has two or three kids, or the husband has two or three kids, and they're now in separate households where they now have to maintain two households, two sets of utility bills, and all of the expenses that come along with that. That is generally the biggest set of clientele that we have, help, because retired folks that have gone through the inflation and everything else that we've seen over the last couple of years are on a fixed income. They're on that retirement income and they're struggling. They don't have the earning power or the capacity
Yeah,
to
to
do
scale
what
with the
we can
economy.
do at our age with what's going on, in the economy. So I would say that being able to come up with creative ways to handle this, I mean, there are basically 8 options for somebody in pre-foreclosure. And if you understand all 8 of those, then you can provide solutions. And you don't have to be the expert in all 8 solutions. You pick 2 or 3 of them, from you can cure the default, right? You can purchase the house outright, or they can sell the house outright with their equity. There are loan modifications, deferments, partial claims, all kinds of things that can happen with that upfront. But there are also acquisition techniques that we as investors teach. That's what we primarily focus on, and that is subject to lease option and short sales, right? We are coming from the investor perspective. We are the acquiring entity when it comes to the short sale itself. And then, of course, there is the bankruptcy, and then there is also foreclosure. Foreclosure should never be an option. And we always just come from a place of empathy and a place of service, and we get the borrower to the right place, right?
Mm-hmm.
We put people before profits, and everything else will come after that. And when you look at the average, just even in my Kansas City market, a year ago, a couple years ago, the average wholesaler assignment fee would be around 15,000. If I can go in and just do a transactional based short sale, we're averaging more in the range of 35 to 40,000 a deal. My partner is averaging closer to 80,000 in Florida. So it doesn't take a whole lot of those deals, right, to equate to a nice living on an annual basis. And that comes because you're a solution provider. You're running into the gunfire while everybody else is running away, right? We're
Mm-hmm.
up for that next big transfer of wealth over the next 4 to 6 years. And so that's why we're kind of screaming from the rooftop, as loud as we can with the Pre-For-Profits event in Florida and with the mastermind that we've created here locally, is we just want to build a army of solution providers around the country, because we can't help everybody with
Yeah.
3 million households already more than 30 days behind as we sit here today.
Yeah.
There aren't enough of us out there.
Well, I think, and one thing my mentor said to me when he started training me on pre-foreclosures and hunting foreclosures, he said 2 things, Bryce. One, they're going to lie all the time, down to like that they're not the person you're trying to talk to. 2, and this is the big one, and maybe you can speak a little bit to this, they're in denial.
Yeah.
They're in denial of what's happening, and they figure if they just close their eyes and close their ears, that it'll somehow go away.
Yes.
And you have to have some like come to God moments with these people and say, look, like it's going one way, and that's like down the toilet. So what can we do to like salvage this thing before it becomes one of the biggest mistakes of your life?
Right. Yeah. And that's what I always tell them. If the person on the other end is 90 years old, then credit is less important to them than it is somebody that's our
In
age.
their
Like the
30s or
the
something. Yeah.
the mother that I was speaking to today is in her young 30s, right? With like a 3 or 4 year old kid. Her Air Force husband passed away, and now she's stuck with a property that is borderline potentially short sale, but some creative solutions could help. So that is one area where she's actually very proactive. She's got a 740 credit, and she's said nothing but that to me. Every time I've spoken to her over the last week and a half is, I just don't want to take a hit. There are the other people, like you just mentioned, that are like an ostrich and bury their head in the sand. And if I
Mm-hmm.
just ignore it, it will go away. Oftentimes, not even the spouse doesn't even know, right? Until that notice of default or that notice of trustee or they get served, that's when one of the spouses find out that something financially is amiss. We focus highly real early on the process. So aside from working with other professionals, real estate agents, mortgage brokers, bankruptcy attorneys, everybody in my local market knows who I am and what I do, right? They are out there talking real estate all day, every day. When somebody is in distress and they aren't behind, the first person they think of is, I'm either going to get a refinance or do something with a mortgage broker, or I need to sell my house. So real estate agents and brokers up front are the first, mortgage brokers, RMLOs are the first people that they talk to. If there's something that's preventing them from doing something with that property, say they've missed a payment or they've done something else, now they know they need some type of solution. So that really puts you on the forefront of being able to talk to somebody early. The other thing we do is we focus on the notice of default list. The moment that the bank or the institution files that lawsuit, that notice of list pendants, we
Mm-hmm.
immediately are pulling multiple times a week that list, and we are getting a hold of them. We have more success getting a hold of somebody within the first couple of days of that notice of default than we do if you let it go much more than a week or 2 weeks down the
It
road,
sinks in.
because well, it
Sinks
sinks
in.
in. And number one, half the time we're actually telling them something they don't know. They don't even know that notice of default, that legal action was taken. And number two, because it's in the first couple of days, you don't have 250 other investors around the country sending texts, sending postcards, dropping RVMs, doing all of that kind of stuff. The moment they start getting bombarded by
They
people who
close
pull
up.
lists and do, yes,
Well, that's
exactly.
why they
They
stop
close
coming to
up.
the door. That's why they start lying. Like as it
Yes,
goes towards the 11th hour, they start lying about who they are, and they've just had enough. So I like that strategy. Like, and I tell my guys that too. When I'm teaching pre-foreclosure, I say, look, you got to be checking the notices right away, and you got to get there right away. It's kind of like those old movies where they'd all have like a bunch of land for free, and there's like a flag, and they shoot a gun,
yeah,
and everyone runs. Like that's the foreclosure business, because
it is.
time is ticking. This is probably the only segment of real estate that does have like an expiry date. Sometimes
Right,
people have
right,
messed up houses, but they don't have to sell. And when
right,
you look at the foreclosure business, this is like the hottest list because it's like a taxi cab. The longer they sit on it, it's just running, and it's like being in traffic in a cab. You're like, and then just watching the price go up and how the solutions go down, and it gets towards the end, and how many sleepless nights before they do something about it. And
yeah,
one thing that I think everyone should know too is you can't save them all.
right.
You can't save them all.
Right. You have to pick the ones. I mean, the name of our group is IPA, and that stands for income producing activities. You can't chase everything. And there are plenty of situations where borrowers can't be helped, or it's, you know, brother and sister that have inherited the house, and one of them is completely responsible and studious, and the other one is an alcoholic on drugs and whatever else, and you're never going to get the cooperation from that person. So you got to learn real quickly how to focus on the ones that can be helped, and just nurse the other ones along until they get to the point of can be helped. And the reason we focus on the front end of the process with referrals and notice of default is because when you get to that notice of sale and you get to that auction date, now it goes back to kind of jump how high, right? When that person says, I'm getting 5 offers from 5 different people, it's 6:30 on a Friday night, I know you're at dinner, but I need your best offer in the next 15 minutes, to, hey, there's an auction, I've got to run around and figure out how to get this thing canceled in 2 days. If I do it, you know, 6 weeks or more ahead, now with third-party authorization, I can stop anything with the bank or the institution, because they know that whoever they're talking to on the other side didn't just take some NAR short sale course or NAR course, and they don't know what they're doing on the other side. Just right off the bat, by the way we're talking to them now as the authorized third party, I'm not really concerned with people coming in and stealing that deal, because I'm the one that's authorized to speak with the bank or the institution. I've built the trust with the borrower. And as you know, banks usually respond in 7, 10, 14-day increments. So if I'm sitting here at 5 o'clock on a Tuesday and I'm like, man, I just can't get this today, I'm like, yeah, that's okay, I'll get to it till tomorrow, right? I don't have to do it today. So therefore, I can really build a lifestyle by design by becoming a solution provider that focuses on the process early. And it is all about the messaging, right? We do certified letters on high value targets. We do direct mail, we do texting, we do calling, we do all of that. But the art of door knocking for most people is lost, right? Being able to knock on a door and catch somebody face to face, where they know you're local, and they can see that you're empathetic and that you're providing solutions. It's a heck of a lot harder for somebody who answers the door on you to hang up, right? They can't disconnect the call as easy. And you know what? Frankly, if they do shut the door, I just knock again. And when they open the door, I just say, hey, I'm sorry, we must have gotten disconnected, right? You know, and start just the conversation with a little bit of humor. And most people say, Rick, what do you guys say at the door, right? And the first thing you do is you look them in the eye and you hear, you know, so I hear the bank's giving you a hard time, right? And they look at you and they say, well, who are you? Well, I'm the guy that people call when the bank's giving them a hard time. I mean, you break that barrier down like right there, right up front. And, you know, if you want to go in and sit your kitchen table right now and you want to get on the phone and give third-party authorization to talk with the bank and the institution, you can immediately show them you know what you're doing and you're going to bat with them. You literally close them right there at the table, and you turn around and you look at the floor, you know, next to their kitchen table, and there are stacks of mail from the bank, from the institutions, from lawyers, from other people. They haven't even opened them up, but you just walked in to their kitchen table and you literally started beating back on the bank or the institution that they didn't know they had options with. So you basically put them, you pull them in
big
right
thing,
there.
you know, like, because I'm all about, I don't like to mail or call. Like, that's not a thing in Canada so much. I'm like, I get in the car, I make my route, I try to catch them. I'll try different times of the day, and same thing. I'll get them at the door, and I'll say, I saw your name. I'll just, and this is one thing I always say is transparency. I say, I see your name on the auction list. Like, if they're gonna sell your house, what are you gonna do about it? And they're like, what do you mean? Or they know, and they're like, oh, I've got it handled. And they say, okay, well, if it turns out you don't have it so handled, give me a call, and you know, we can talk about your options. And good luck and effort and energy, right? On to the next. So
But you do follow up with them. And if you don't, you're
yeah,
missing out, because we have
I'll go
so
back.
many investors around the country that will get the, oh, I'm working with the bank. We're doing a loan mod. Would you know that 80% of loan mods fail within 3 years? Most of them within the first 6 months, right? So most people will work that hard to get that lead, and they will get that phone call that says, no, never mind, I'm working with the bank. We're working on a loan mod. They hang up and they never follow up with that person again. Whereas we continue to touch them, you know, every few weeks and check on them and continue to offer support. and do what we need to do to make sure they understand where they're right, because they will come back to you. I guarantee you they will come back to you as long
Mm-hmm.
as you stay top of mind and keep working with them. So that's really important. We're going to see a ton of it, over the
Yeah.
next 4 to 6 years for sure, whether it's residential or commercial.
Yeah. My mentality is always either it's sold to me or it's sold to someone else. But the bottom line is it must be sold. There's a transaction
Yeah.
happening, and unless it's been sold to someone else, I'm still gonna show up. So let's talk a little bit about the funding side, because if you're getting into these things, and the mortgages are a little bit sideways, that doesn't give you a whole lot of options for them to keep carrying title unless you're bringing some capital to kind of clear it up. So what are you doing
Right.
to A, raise capital for your business, and then B, how does that capital play into this business for you?
Yeah, and we've been pretty fortunate from being able to spawn a pretty decent network of private lenders,
Mm-hmm.
because it does. I mean, the pre-foreclosure market space can be cash intensive depending on your exit strategy. Now, obviously, if I'm doing a short sale, I'm getting the bank or the institution to agree to do this short of the existing payoff, but I've
Mm-hmm.
got to have the capital to actually acquire it. And that's where, we are the investor and we are acquiring a majority of the properties, but we also do have a handful of our trusted buyers, and that's it. There is no way in the world we will put something like this out to a huge list of 400 or 500 buyers, because you never know if they're going to perform on the other side. So having
Yeah.
somebody that can bring capital to the table, like a number of my trusted buyers in my market here locally have 15+ million-dollar credit lines from their institutions or their lenders. But when it comes to doing some of the creative stuff, and people always tell me, well, I can't do this sub-2 deal. I can't cure this default. I can't cure the arrears. I can't do any of this type of stuff. And I'm like, yes, you can. Well, it's $6,500. I don't have $6,500. You don't have to have $6,500, because there are a million people that would fall over, bend over backwards to be that equity partner for you. They've got
Mm-hmm.
$6,500 sitting around and they don't know how to do what you
What
do,
you do.
right? So
Yeah.
being able to bring in equity partners is a big thing. And when you're looking at potentially doing a lease option or a subject to or some other form of creative financing, obviously it becomes extremely important to understand what type of capital you're going to need up front to cure the default, essentially take over, repair the property, and get it into a position to do the exit that you're trying to do, right? So we've built a network across the country where even some of our members are really they've just joined the community just to be money partners,
Like a
right?
bridge loan partner. Yeah.
Yeah, bridge. Yep, exactly. Bridge loan, or, we work with, transactional lending. We do all kinds of things to make sure that the capital is there. But the biggest, I would say, misconception for most people getting into the pre-foreclosure space is, well, I don't have any money to invest. And I always fire back with the old cliche, if there's a deal, there's
There's
money.
money. Yeah.
There's money. Yep.
Well, and I think that's a mental block for a lot of people, that they think they need money to transact real estate. Like, it's deal making, and when you provide value, value will be exchanged for value. And it just so happens like someone could give you a car, that's value, but most of
Yep.
the time it's cash or a check. And a lot of people don't know, because this is the big thing that really resonated with me back in the day. There's two ways to make money in this world: doing things people don't want to do,
Yep.
people don't know how to do. No one wants to move the garbage. And if you're good at being a garbage guy, you can make a lot of money. And the same thing with pre-foreclosure and foreclosure business. People don't really want to do it because it's kind of hard. It's hard. You're dealing with some of the most flighty clients. And two, they don't know how to do it. And that those two together, that's when there's always big money, when you're able
Right.
to get both. Like, oh yeah, no one wants to do it. No one wants to shovel the elephant droppings at the circus. It doesn't take a rocket scientist though, so you're probably not going to make a lot of money. But if it's got a specialization of both, where it's, I don't want to do it and I don't know how to do it, and if you can solve both, that's always big money. So
That's right.
before we wrap the call up, tell people a little bit more about how they can participate in the event, And going forward in the future, this isn't the only event you guys are going to run.
Right, that's right. So we started IPA for REI literally a year ago on January the 2nd. And I met my partner William in 2020. And we knew then, based on, the government saying, stop paying your mortgage, stop paying your
Yeah.
rent, don't go to school, don't go to work. We'll send you a check. We're injecting trillions of dollars into the
Oh,
economy
man.
to the mortgage, moratoriums, right? That then expired. And then did you know that the VA actually is in their second moratorium in the last 24 months that runs through the end of May this year? Like you can't tell me that the government and the VA are creating another moratorium because there's no problem, right? This beavers don't build dams in the middle of a desert,
Yeah.
right? So this moratorium should be enough for people to understand everything that's going on. So we said, let's stand up this community that's different than any other community, where it's real hands-on. Monday morning meeting, Friday morning meeting. It's us. It's the two of us. We're doing deals in the trenches every day with everybody. And then we partnered up with Real Estate Recovery Group, the Short Sale Savage out of New Jersey. And we said, we need to bring this to a bigger audience. And that's why we decided to do the Pre-For-Profits event in Clearwater, Florida, literally the 28th and 29th of this month and the 1st of March. It's a 3-day event down in St. Pete's at the beautiful Carroll Hotel. Let's get down there. The reception that we've received on webinars that we're doing every Tuesday at 11 a.m. Eastern, and the reach that we're hitting with people that are saying, yeah, I need to become a solution provider. My business was stagnant. I didn't do much. Nobody's listing. Nothing's going on. And we're sitting here going, our business is doing this. We need you to come down. We need you to learn. That's kind of where the entire premise of Pre-For-Profits came up. And we're looking to do 2, maybe 3 a year. But we need to get through this first one because we had a bunch of people ask
You'll
us
get through
over.
it.
Yeah, the last couple of events, they're like, can you offer a streaming option? Can you do this? I can't travel down there. And it's
Yeah,
like,
they're
man, the
all 2020
logistics.
now.
Yeah,
They're all like, can I do it with my pajamas and my Zoom? And
yeah,
it's like, no, because if
yeah,
that's your attitude, foreclosure hunting ain't for you, man.
yes,
Like
yep.
this ain't for you.
It's
If you're
about
like
being in
wanting
the
to
room.
Zoom meetings, no, because
It's
you're
about
not
being in the
gonna like,
room, building
yeah,
that network, building your, like, rubbing shoulders and doing that type of that. We had that conversation probably at nauseum about potentially doing the virtual option. It was just like, no, we want people there. So people do business with people they know and trust. The sponsors that we have there are some of them are second to none. The VIP guests that we have there, the VIP speaker is Dan Zatowski, who does a lot of raising capital and exit strategies, 5 exit strategies on buying notes and doing different things like that. So it's going to be a lot of fun. And I think that's the best way to kind of interact with, at rickhamrick.info, on the screen itself is one quick, easy way to kind of connect with me and see what's going on. And that would show you like the IPA group and show you my Kansas City entity and my national acquisition entity and everything else. But probably the best way to kind of get active, because we're literally like, it's on our doorstep. It's going
yeah.
on right now. And if you start to prepare for it,
I'm surprised personally that we're not neck deep in it. They've done enough little
artificially,
micro managing,
yeah, yeah,
artificially pushing
yep,
the flag posts back. But um, like you said, beavers don't build dams in the desert. So
yeah,
I
yep.
feel like, we've all been kind of waiting around for the ball to drop on all that mortgage pressure. And even up here in Canada, it's coming to a boiling point. So
Well,
um,
auto loan defaults and repossessions are at the highest level this country's ever seen. Utility shutoffs are at the highest level this country's ever seen. Credit card debt is over $1 trillion at the end of Q2 of 2023. I mean, the list like literally just stacks up and goes on and on and on.
groceries
And
are at the highest that they've ever been. Gas is the
bankruptcies
most
are at the highest they've
expensive
been
it's ever
since
been.
2010.
People's
So
wages
it's
it's bad.
exactly. Inflation, it truly is like literally 35% when you take and look at the taxes, the insurance, the everyday
You're
living,
being
even
nice is
like everything.
35%. Yeah, you're
Yeah.
being
Well,
nice. You're
that's,
being conservative.
people are like, there's so much equity in the market. I'm like, well, hey, you know what? Talk to the people that stopped paying in 2019 and they were gifted 2020 and they haven't paid since then. I mean, for a statement to come across my desk that shows 85 plus thousand dollars in arrearage is not uncommon. It is the thing. People were taking forbearances and they didn't even understand what forbearances were. And they were claiming hardships that they didn't truly have. We're in for a whole new time when it comes to AI being involved in figuring out if people were fraudulently taking some of the things that our fearless government and the media were telling everybody to take in 2020. It'll be a really interesting period of time to see how we come out of that. But there's too much going on. And everybody says there's too much equity in the market and the feds will bring us down for a soft landing. It's too late. It's too late. That ball is already rolling. And besides,
I feel
when's
like
the
there's
Fed?
a certain amount of there's a certain amount of a tide, they push it out with an entire purpose to pull it back in.
Yes.
So
Yes. Yep.
I think that's capitalism inherently, unfortunately, but fortunately, because, and here's the thing, if people were just responsible with their loans, you wouldn't have a business. But the human nature is to take advantage. And so now those people who, like you said, were taking loans they didn't need or pushing their mortgage out that they didn't have to, it all comes back. It's like the bill must be paid. Just because you pass the buck, it's going to go all the way around and it's going to be right back in your lap, and you got to do something about those properties. So I really appreciate you stopping by, Rick.
Yes, thanks for having me,
we could
Bryce.
go on pre-foreclosures all day.
Yeah.
But that's why you need to be checking out groups like Rick's. You don't want to be like buying an umbrella in the rain. Get educated, get ready. Even if it's just a small part of your business, what could hurt by adding another prong onto your business? Like if you're doing 4 things and you could get a handful more deals a year by adding a 5th thing, why not? Why not? Because it's just another skill set, and it's not that hard. It actually is something that's it's not simple, but it is easy.
Right. That's what we're saying. Add another line of business to your repertoire, because if you have this as part of what you do, then you will be a sustainable business in any economy. Whereas you see right now, people are doing this right now, especially the real estate agents and investors.
Wholesalers,
they're like stagnant.
flippers, buy and hold people, cash flow. It's all
hundreds of
crying.
thousands of agents not renewing their license, which makes sense. They don't want to pay the fees. They don't want to do any of that type of stuff. You've got to learn how to adapt, and that's why we're putting this out there as much as we are.
Awesome. Well, Rick, I really appreciate you stopping by. And until next time, guys, we'll catch you on the next episode.
Thanks, Bryce.
Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.